To buy the dip or not to buy the dip? So that's a question we're going to be asking quite a few times over the next few weeks because yes, it's been painful, but I don't expect a V-shaped recovery at least. And as you know, in my previous video, I've been shorting the market, but right now I'm out of my shorts and I'm ready to start buying and start dipping into the dip. So the question right now we want to answer for today's video is whether Shopify is one of those companies. What's up everyone? My name is Bill Hawk, and on this channel we talk about stocks, crypto, real estate, and buying the dip, which is what we're going to talk about today. But I just wanted to give you an update as to why I've been a little busy. I want to post a little more frequently, but I've just been busy with the markets. I've been kind of just trading and shorting the market, which has kept me busy because I had to keep a close eye on it. And fortunately, I've made some money, but I want to get started to buying some companies and some crypto, which I want to get back into that learning phase and also just sharing my journey and posting about that stuff. And I also want to get back to shaving as well. Let's first talk about the Shopify dip specifically. So one of the metrics that I'm using right now to assess the depth of dips and whether I should start dipping my feet in is where is the company's valuation relative to pre-COVID levels. And Shopify is one of those companies that is now trading at 20 times EV sales, which is not cheap by any means, but it's at its pre-COVID level. So the next thing we want to see is, has the fundamentals improved or deteriorated, which basically is going to help us make that decision. So let's go ahead and do that. I'm sure you're familiar with the Shopify business model, so I'm just going to skim through it, but it's essentially a web-based platform that allows merchants to set up e-commerce stores and sell to end consumers. It's the simplest way to set up and sell online. They have small, medium, and large e-commerce businesses on their platform, and being a user myself, I can tell you it's really easy and probably the best among their competitors. They've got superior add-ons, coder support. Is just amazing platform. I don't think they're going anywhere. They have a pretty strong moat in my opinion. The key performance indicators or KPIs for Shopify as a business are monthly recurring revenues or MRR and gross merchandise volume or GMV. So the more customers they bring on the platform, obviously the larger their monthly recurring revenue is going to be, and the more they process e-commerce payments and transactions on the platform, the more the gross merchandise volume, which they generate revenue from through Shopify payments and other platform fees. So let's dive right into the valuation because this is the most important part. And just a reminder, this valuation spreadsheet is available to members of my email list and also the Discord, which by the way, I'm trying to grow and it's going to be great. So I highly recommend you join and it will help me out. Of course, feeling like I can talk to people, and I think it's just a great community that we're building. And again, you can change these models, we can discuss them, and it's just a better way than me just talking to a screen, of course. The biggest drivers of the valuation are MRR and GMV here, which grew 53% and 96% respectively in 2020, which is insane, but mostly due to COVID. They were also profitable for the first time with an 11% net income margin. But as COVID is winding down, hopefully, I hope it's winding down, so is their growth and their margins, which kind of makes sense because it's relative to the stock price as well. So Q3, you can see that they had a significant slowdown and it became more evident with margin compression as well. They had actually a negative net income margin, but that's because they had a $30 million impairment where they wrote off their lease agreements as a decision to have purely remote workforce, which by the way is going to help increase margins in the future. So I think it's a great idea. They also had a firm warrants, which again were in a gain. So I removed that and did my own version of adjusted net income. And the margins are negative, but I can see that it's clearly not sustainable, this 11% margin that they had during COVID. So that's a big unknown to me and something that does concern me because when I had originally done their forecast, I thought this 11% margin was going to be sustainable. And I do think that Wall Street thought the same thing, which is why we're seeing a big drop in the stock price. But right now, as it stands, I think the margin is probably going to be at 5% at best in 2024. So that's a big question that we don't have the answer to. The thing that we also really have to be concerned about and drives, like I said, the biggest part of this valuation is their forecast for GMV and MRR. So I had to come up with some way to forecast this. Originally, of course, we're not going to have these levels maintained of growth that we had during COVID. And we can see it's dropped, like I said, to 32%. Now, not assuming that this is going to drop even further. So I would say this is probably a bearish case because I'm not factoring in a lot of things that can drive the growth. But hear me out. So when we look at their growth rates that they've had overall in revenue in historically 2018, 2019, and 2020, which I use by looking at this sheet over here, which data is from Statistica, and this website you're probably familiar. And I was able to see global e-commerce growth. And from this, I tried to come up with a multiple that Shopify grew at. And Shopify grew anywhere from 3 to 5 times that global e-commerce growth multiple each year. And that's been reducing lately. So to be conservative, I gave them e-commerce growth of just 1 times that multiple, assuming they can keep up with that demand growth globally for e-commerce, which is 30% compounded annually up until 2024. So I would say, this is probably accurate and conservative, but it's the best I can do. Again, this, like I said, we can talk about this all day, but this is basically the assumptions I took to drive my DCF model and come to their intrinsic value of $500 a share, which you can see is still quite below what they're trading at right now. So they're still very expensive. And now I'm going to factor in a compression of their multiples to something that's a little bit more reasonable, even though they have compressed quite a bit. I really have a hard time understanding more than $450 to $500 a share given this, bearish scenario and slowdown in e-commerce growth. So that valuation analysis alone just makes me very, very cautious into jumping into Shopify right now. Given the current macroeconomic environment, I just think that is too scary for me. I'm legit scared of where this stock can go. Even though I think the company is great, it's just a very expensive stock still, and I'm not in the position right now to be jumping into expensive stocks unless I feel like there is clear growth. And for Shopify right now, it seems like there's a case for slowed down growth, which is normal, but that's something we're seeing globally. There's just a lot of concerns here. But again, I'm not factoring in the growth that's coming from their partnerships with TikTok, Google, ERP systems. They're doing a lot of good things, and I really applaud them for that. They're a great company, great management, and like I said, I like it, but it's just too damn expensive for me to jump in right now, and that's the reason why I would stay out. I'll just watch this thing because I think it's going to keep dipping, and then I'll look into, I also think that there's other companies there that right now are worth buying. Look at Adobe, for example. Check out the video, by the way. Not completely related to this company, but they're trading at a pretty attractive multiple of monthly recurring revenue right now, and the reason why I'm comparing the two is simply because of that fact. There's a lot of attractive options out there, so I will do my best to be hunting that dip right now. And yeah, if you enjoyed this video, please hit the like button, please subscribe if you received some value. I'll continue hunting the dip for both stocks and crypto, and yeah, stick with me, and I will hope to see you on the next one.